Good morning and welcome to this weekly market update from MRC Markets. Today is the 6th of August 2012. What we'll do today is go through some technical analysis on Euro dollar, cable, dollar yen, Aussie dollar, US dollar and gold. Doing a slight review of last week and trying to give some sort of decent outlook for this week. We'll also have a look at the weekly calendar, the weekly forex calendar, and highlight the main news this week. Won't be making any trade calls or recommendations. You trade at your own risk. If you could please read our full disclaimer on our website www.mrcmarkets.com. Very new followers do have 3 moving averages on each of these charts. The red one is a 55 simple moving average, the purple is a 100 simple moving average, and the gold is a 200 simple moving average. Okay, and let's have a look at Euro dollar. This is the weekly chart. Let's not dwell too much on the sort of weekly setups, etc, etc. Let's just basically look at last week's candle and what it was. I mean, the previous week we saw we had a nice bullish engulfing. As we said last week, the odds are always going to be towards the upside on engulfing. I mean, if you're playing it as a sort of 50-50 play, if it's going to be a red or green candle, the odds are always going to be on the green side. And also we're very due a retracement on euro. We've been selling off for a long time now with, as I'm sure you're aware, of the whole Eurozone crisis, etc, etc. But basically last week's candle could be classified as a hanging man candle, or sort of hammer style candle, basically a long lower wick. So the price, we had a lot of selling pressure into the start of the week, but then price came back up and we had a significant move on in euro on Friday. So a lot of buying into the end of the week, resulting in a very, very strong candle last week. So the odds for this week will be again towards the upside, especially on this weekly chart. I mean, look how far away we are from all the moving averages. The 55-week moving average is still at around one spot, 32.47. So there's still a long way to go to those moving averages, and you've got to remember that price does like to go back to these moving averages. So be aware of that. But of course, the fundamentals in the euro dollar are still very, very weak in my opinion. So, but in terms of the technicals, which we like to focus on in these videos, on the weekly, you have to say the bias is towards the upside. Let's go to a shorter time frame now on the daily chart. The last sort of few months, really, we've been well below this 55-day moving average. We've been saying if we do get a retracement, then that'll be the first sort of interesting selling zone that a lot of people will be focusing at who trade on these daily charts. And you can see on Friday we got a test of this 55-day moving average. We did actually get a daily candlestick close above, but you can already see today we are getting some selling pressure into this. So maybe just a slight retracement and we may come back above. But I mean, it was key last week that we had a daily candlestick close above this 55-day moving average. So in terms of moving average play, you say the next target should be the 100-day moving average, which is standing at around the 26.54 area. Yeah, so in terms of that daily chart, that's all I'd really be focused on. If we zoom it down to a shorter time frame, first of all, let's look at last week's fib from lows to highs. The first fib I would look at, we didn't get a bounce off the 50% or 61.8, the two areas that we look at for some sort of decent, healthy retracement. But you can see we came back and we took out these highs, but we have failed to get to this 123 extension. So next area, if we look to the 1 hour chart, I mean, in my opinion, I'd be looking for buying opportunities. You can straight away, the first thing I'd be doing is draw a fib from your lows to your highs on this 1 hour chart. And you can see we're still a long way away from these moving averages. It looks like it just wants to have a nice retracement. As you can see, from Thursday and all the way to Friday, I had a huge up move. This normally follows a retracement. So the first sort of decent, healthy retracement area would be this 50% Fibonacci retracement level, and that stands at the 1.2288 level. Now also you can see that coincides with these highs around here. So we had these big spike highs. Remember when Draghi was speaking, I think on Thursday. There's a lot of positive anticipation before he spoke at the ECB press conference, but then he failed to deliver causing a massive sell-off. I think it pretty much came to the 124 handle, and then we had a big sell-off down. You can see that huge spike on that hourly candle there. But we have since come back up from it. But anyway, that 50% fib retracement coincides with those highs there. So if we came down to that level, then I would expect a lot of buyers coming in. Also, we remember we do have this 100-hour moving average as well, so we could get some sort of confluence there if it comes around this sort of area here. We could get a 100 bar moving average and a 50% confluence, but that's if we get the a further retracement. And as looking like, you can see as we speak, we're getting some selling pressure already for the start of the week. Okay, let's have a look at cable chart. What do we have on the cable? This is the weekly chart. The first thing I always have a look at is George's trendline support. It's still playing inside this sort of triangular formation here. So you have the trendline resistance and the trendline support. Let's have in terms of the moving averages, you can see this 200 week moving average is capping cable currently. Last week's candle, very sort of similar to Euro, a bigger lower wick, but it was a red body. You can see we're getting a lot of sort of lower wicks coming in on this weekly chart. But in terms of the weekly, it's all about this sort of triangular formation here. You can draw another trendline resistance from these highs here. So you can see we've got three lower highs there. But in terms of weekly, it is still in this solid uptrend. So you can't ignore that really in terms of the much bigger picture. But if we don't get any sort of momentum towards the upside, then we need to get a clear candlestick close above this 200 week, and ideally above these cluster moving averages, because they most probably will act as resistance. Let's have a look at shorter term time frames. This is the daily chart. You can see we're kind of chopping. The 100-day moving average cap there at the one spot 57.66, but it has been relatively choppy on cable. You can draw another trendline support there, so we're making higher lows. But the level would be one spot 57.50. You can see that on the daily with these multiple spikes around here, and a spike here, which then tests that 100-day moving average, and it's capped it. So in terms of the shorter term time frames, the chart I'll really be focusing on would be this daily chart. We're in this sort of triangular pattern here on the daily, with the trendline support and that resistance here at 157.50. So if we're getting more momentum to the upside on cable, then we need to get clear break and close above this one sort of 57.50 area, which would be then above the 100-day moving average. And for any sort of selling opportunities, I would expect a lot of buyers coming in at this trendline support. Okay, let's have a look at dollar yen on the weekly. Nothing massively of interest, in all honesty. We were still in this huge downtrend all the way from sort of 2007. But in terms of this sort of week, the levels, it's all about the sort of 55-week moving average and the 100-week moving average. Really, a few weeks ago we had that 100-week moving average cap in there, and it's getting a bit choppy around this 55-week. If you zoom in even nearer, you can see we're trying to. The last sort of couple of weeks we have come. We've had a close below. 3 weeks we had a close below this 55-week moving average. And you can see the last 2 weeks we've come up and tried to make a weekly candlestick close above it. And you can see we've tested it twice and it is capped. And you can already see this week, we're obviously from last week's candlestick close, we've come up and we're already starting to get some selling pressure. So it looks like we may get a similar sort of formation on this weekly candle. We'll start to sell off the first couple of days in the week, and then it may push up at the end of the week, forming some sort of hammer. But in terms of the weekly, if we're going to get any sort of momentum towards the upside, then we need a clear break and close above that 55-week moving average. And in terms of the daily, first thing that just springs to mind, when I'd have that trendline support there, pretty much similar to last week's video really. It's still in this triangular formation. The last week was just a pure sort of choppy week. You can see the last sort of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, sort of 13, 14 candles. It's just been going sideways, but it is still playing out in this triangular formation. So the only thing I'd really be of interest in is if we got a clear daily candlestick break and close either side of this. Another thing I would look at is this 55-day moving average. If we do get popped to the upside, then that may cap. Let's move to the Aussie. On the weekly chart, nothing massively interesting. I mean, you see we now we've broken above these moving averages here. 55-day move. Well, it was firstly the 100-day moving average, which was acting a bit sticky, and then the 55-day moving average. You can see that candlestick there. I'm hovering over shooting star pattern. We tested that 55-day moving average, and then we came back down. But you can now see that the 100-day moving average then supported. So we're now well above the 55-day. So in terms of the daily, it's all about these highs really, at the sort of 170 is the high there on the Aussie. But it is looking very, very bullish. I mean, last week's weekly candle was just a standard, solid weekly candle. It looks like it does want to retrace that on that week. I would expect some sort of retracement, but I would also be looking at it in terms of the shorter term time frames. Solid sort of bullish uptrend here. And let's have a look. It's playing inside a sort of channel on this 4-hour chart, kind of at the sort of top of this channel now. It looks like it does want to come down towards the bottom side of the channel. If you look at the bigger picture on this 4-hour, I would not be surprised. Similar to Euro and K, we're looking for some sort of retracements, but it's very, very bullish, this Aussie chart. So, I mean, if you flip it to sort of 30-minute chart, a lot of people I would expect will be playing the fib from the low here. I suppose you could have use that high there, or you could ignore that spike high and draw it from there and look for any sort of sell opportunity. It looks like it wants to come down and retrace towards a sort of 50% here. But the best way to play it, really, not a massively interesting chart in all honesty. I'll stick on that 4-hour, look for sort of any sort of buying opportunities off this channel. But yeah, I mean, in terms of the forex pairs, the Aussie is not massive interest in my opinion. I think Euro, dollar, and cable much more interesting charts in my opinion. Okay, and on to gold. Weekly, same story really. That we've been speaking about for the last sort of few weeks. It's now in a solid uptrend. You can't deny that. And it's definitely all about the 1630 level. You can see this is pretty much not the 1560s, sorry, support on that weekly. How many times have we said weekly candles broken below that 1560, but the price has come back up, and you can now see last week's candle, the week before last week's, a nice bullish candle there, nice reversal, and it looks like it is starting to grind higher. I mean, there's not a massive conviction in last week's candle, especially after the euro-dollar move. You thought with this sort of anti-dollar that happened on Friday, you thought gold would pop up and follow euro-dollar, but it didn't really. So it's quite an interesting point there, and quite surprising why it didn't. Mainly because it could not get above these 1630s, which we've been speaking about for many weeks now. Just drop something. You can see it much clearer there. On the daily, it's still a similar story. On the daily, it's all about 1630s for me. We need, if we're going to get any sort of bullish momentum towards the upside, then we need to get a clear daily candlestick close above that 1630s. You can also see the 55-day and 100-day moving averages are still inside this range, and it's still very choppy. So look, it's crying out for a break towards the upside. But if we're going to get that break, then we need that 1630s break. But then of course you've got that 200-day moving average sitting very flat above there, and that's around 1639. So those are the two big resistances on gold. But I'm still bullish on gold. Okay, that's done for the charts. Now let's have a little look at the forex calendar. Today, at the only big news today is Fed Chairman Ben Bernanke speaking at 2 p.m. Look out for that. On Tuesday, tomorrow, we have some Aussie data, cash rate, which is at 3.5% currently, and the RBA rate statement. 9:30 of UK manufacturing production, month on month. 1:30 has some Canadian data, the building permits and IV PMI. At 7:30, Fed Chairman Bernanke speaking again at 7:30. On Wednesday, 10:30, we have the BOE inflation report, and it's quite quiet on Wednesday, really. So I mean, there's some Kiwi data overnight for any that trade New Zealand dollar. Some more Aussie data overnight on Thursday at 2:30 a.m. We have the employment change and unemployment rate. Unemployment rate now at 5. It's expected to come out slightly higher there, 5.3%. China's CPI, that's a key one to look out for. We expected a big drop there from the previous 2.2% down to 1.7%. There's a lot of not good stuff coming out of China at the minute, and that does affect Aussie, which is of course a risk appetite currency. We also have Japanese monetary policy statement and overnight call rate, and that follows on Thursday the BOJ press conference. 1:30 has some more Canadian data with the trade balance, and then at 1:30 on Thursday we have US trade balance and a weekly jobless claims. Weekly jobless claims forecast at 371,000 from the previous 365,000. Remember, on last Friday, I have those very bullish NFP numbers causing a lot of risk appetite across the board. That's what you're seeing with euro dollar, that big push up. We also had a decent ISM out on Friday as well. That's why we've got a strong risk appetite across the board. That's why we've seen in Aussie and in euro. And on Friday we have some more Chinese data overnight. Trade balance, 9:30 UK time. We have UK PPI input data. Interesting numbers there. Previously it was minus 2.2%, and it's forecast at minus 2.2%, and we're forecasted at plus 1.3%. So that'd be an interesting number to look out for. And at 1:30 we have Canadian employment change and unemployment rate. So a very quiet week in terms of data, but of course these markets are still going to move, and you have to keep an eye out for all these Eurozone people like Draghi just randomly saying stuff that is moving the market. You have to be aware of these guys, because they do have a big impact on the market. But in terms of economic data, it is quite quiet this week, but I would expect some volatility still in the markets as usual. Okay, that's all for today. Hope you enjoyed this video. Have a great week trading, and I'll catch you next Monday. Thanks for listening.